Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from January 12th to January 16th, 2026. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from January 12th to January 16th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Australian household spending data and Australian Westpac consumer confidence change. Tuesday brings the crucial US inflation figures including both headline and core inflation rates, Canadian building permits, US new home sales, and New Zealand building permits. Wednesday features US retail sales data, US PPI figures including both monthly and yearly data, US existing home sales, and Japanese PPI data. Thursday includes UK RICS house price balance, UK industrial production and GDP monthly data, German full-year GDP growth for 2025, Eurozone industrial production, US Philadelphia Fed Manufacturing Index, US New York Empire State Manufacturing Index, and US initial jobless claims. Friday concludes with US industrial production data. This week's key market-moving events will be the US inflation data on Tuesday and US retail sales along with PPI figures on Wednesday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the British pound against the US dollar and the US dollar against the Japanese yen, as both instruments show contrasting technical setups heading into key data releases. Let's start with the British pound against the US dollar. Looking at the daily chart, the pound-dollar pair is currently trading around 1.3397, showing bearish pressure after a recent breakdown. The price is moving lower, breaking the 20-day moving average from above, which is a negative technical development. The stochastic oscillator is moving lower toward the oversold area, indicating strong selling pressure. Looking at important levels, the British pound against the US dollar has support at 1.3288 and 1.3178, while resistance can be found at 1.3538 and 1.3661. Thursday's UK GDP monthly data and industrial production figures will be important for this pair. The monthly GDP is expected to show a contraction of negative 0.1%, matching the previous reading. The break below the 20-day moving average is a significant bearish signal. The pair may test the 1.3288 support level in the coming sessions. However, with the stochastic approaching oversold territory, traders should watch for potential short-term bounces. Disappointing UK data on Thursday could accelerate the downside movement toward 1.3178. Now, let's turn to the US dollar against the Japanese yen. On the daily chart, the dollar-yen pair is currently trading around 157.93, showing strong bullish momentum. The price is moving higher above the 20-day moving average, confirming the upward trend. The stochastic oscillator is moving higher toward the overbought area, indicating strong buying pressure but also suggesting the pair may be due for a pullback or consolidation. Looking at key levels, the US dollar against the Japanese yen has support at 156.85 and 155.69, while resistance stands at 159.03 and 160.09. Wednesday's Japanese PPI data will be monitored by traders, though the pair is more likely to react to US data releases this week. The strong positioning above the 20-day moving average with momentum toward overbought territory presents a bullish picture. The next target for bulls will be the 159.03 resistance level. However, with the stochastic approaching overbought territory, traders should be cautious about chasing the rally at current levels. Tuesday's US inflation data could be the catalyst for either a breakout higher or a pullback to support levels. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Tuesday's US inflation release and Wednesday's retail sales and PPI data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.